Hey insurance, this is Tony Cañas, Chief Motivational Officer at Insurance Nerds and InsurTech Client Advisor at the Jacobson Group. Recently, a lot of calls to chat with Tony have been from people who are disappointed with their recent raise and worried that they're not keeping up with inflation. I completely understand the worry, and I want to share some thoughts about how you can improve your situation, which probably requires changing companies, and whether or not you should. There is a misperception that the company is always looking out for your best interests and managing your career. This is simply not true in a shareholder capitalist system like the US, where lifetime employment is an antiquated concept. Don't get me wrong, insurance is a wonderful industry to work in, and many insurance employers are absolutely awesome employers, but they still operate in a shareholder capitalist system, even if many of them are mutuals. Ultimately, the company's job is to do what's best for the company, not what's best for you. Ultimately, your job is to do what's best for you, your career, and your family. Think about it from the company's perspective. Inflation is running at roughly 7%, and giving every employee a 7% raise to keep up with inflation would seriously damage their expense ratio. And keep in mind that insurance is heavily regulated and it takes time to file for higher premiums to make up for inflation, and those hikes might not be approved. Raises below inflation increase the risk of your people leaving, especially since remote work has become so prevalent in our industry that moving is probably not required in order to change companies, and they have to balance for that. But ultimately, it seems that most carriers are taking that risk, basically betting that the great majority of employees won't leave because of dissatisfaction with their raises. Now, let's look at it from the perspective of the employee. We are in a scorching hot talent market for insurance talent, and if you've been at the same company for more than a couple of years and are not at the top of the pay range, chances are you can get a significant raise by making a move and negotiating hard. And you can likely do it without moving if you're okay with continuing to work remotely. But should you make that move? Well, it depends. Let's look at a few hypothetical situations. Bill is an entry-level claims adjuster. This was his first insurance job, and he's at the bottom of the pay band and is having trouble keeping up with his bills. He has 18 months in the current role and has done the research and is pretty sure that he can get a significant raise from making a move. He should probably make a move in order to cash in on some of the experience that he has gained and to take advantage of the hot talent market and to relieve the stress of having trouble paying his bills. Gina is an underwriter, and this is her second insurance role, both at the same company. After spending 3 years in claims, 6 months ago, she managed to make the move to underwriting, and while she's paid towards the bottom of the underwriting pay band, she's learning a ton, and the company's paying for her CPCU, both of which are making her more valuable in the long term. While her pay isn't great, she's able to cover her bills, even if she's losing a little ground to inflation in the short term. In her case, it probably makes sense to stick it out for another year or two and then make a big move for a lot more pay once she's finished CPCU and has more valuable underwriting experience than just a few months. Mike is a well-paid underwriting manager with 10 years of experience. He made a move 4 years ago and is paid towards the top of what the industry pays underwriting managers. He likes the company and his immediate leadership and loves his team. His raise this year was only 4.5%, so he's concerned that he's losing ground against inflation, but it's not affecting his finances too bad. He can still comfortably pay his bills, even if he is being able to save a little less than he used to. He also believes that he's in line for a director role in the company in a few years. In his case, it probably doesn't make sense to make a move, since there's not much to gain and a lot to lose. There's a lot to this, and I don't want this video to end up being 15 minutes long. Main message I want to leave you with is that if possible, any move should be biased towards long-term benefit, not short-term fear. I'm more than happy to help you think through it if you want. Grab some time at chatwithtony.com and I'll help you think through the pros and cons and come up with a long-term plan. Thanks for tuning in. I hope that this was helpful.